interesting. You on cost. Tell people about your poor financial literacy without saying it. So I don't know whether you all agree with this or not. Lah. Just, do you all really looking at this yield on cost? Do you try to look at this way so that you feel good about it?
Welcome back to another episode of the Backholder Pod. So on Monday, I released a video about talking about why dividends do not matter. And I totally did not expect the comments section to be like a war zone. So in this video, we'll be reacting to those comments. So first of all, let's start with Boon Tee's comment. Where was it? This part need to cut up. Okay. Boon Tee's comment. Damn it, Kelvin almost convinced me that dividends are irrelevant. So Boon Tee, what's your thought on this?
Yeah, very convincing, right? I think first thing I need to credit Kelvin for a lot of research being done on this topic. So it's not just the typical debate about whether dividend investing is good or bad. I know there's a lot of debate on this. It's just that I think in this video, Kelvin really focused on these portions about the dividend irrelevance. Meanings to say, whether the companies pay dividend or not, it actually not important because the dividends also come from the company itself, right? So either they pay it or if don't pay it out, they just keep reinvested with the company. You also still get the returns. So whether the company pay or not, that's not important. This is, I would say, a very narrow scope of discussion. But still, on the comment section, you can see that people are very passionate about this topic and give all sorts of funny comments that we plan to go through today.
Actually, I was super shocked because a lot of the comments were saying like this is a misleading video that is a very clickbaity. Personally, I totally never planned for it to be clickbaity because it's directly talking about what the video is about, right? So okay, yeah. Okay, so one of the comments is like you saying dividend dropped a lot in the past 2 years, but the thing about dividend stock is that you don't have to sell your stocks to get money. So whereas if you have to sell your stocks and you need profit, the only thing you can do is sell them. So this becomes like buy high, sell low, like especially in the past 2-3 years, right? But for dividend, you don't have to sell, so you still have the same number of shares. Yeah.
I think this one quite interesting because it is playing with all the the fallacy thinking, right? Because for example, there are also people who say that, oh, I buy this stock, crash by 50%, as long as I don't sell, I'm not making a loss. So I mean, in theory, it's like confirm you lost already. The share price already dropped 50%. Of course, it can go up, then you can claim that actually you haven't lose any money, right? But at that moment, when you look at the share price drop 50%, you lose money, meaning you lose money. That's just admit that, right? But I think somehow people have all sorts of ways to do their own maths to convince that actually I'm not making losses. So I think similar to the questions that was posted that you mentioned, right? So as if that if you don't need to sell, you just keep receive the dividends, and then you can just like I don't look at the share price. I just focusing on receiving the dividends. Then whatever happened with the share price is not my tai chi. That kind of attitude, right? Which I think is definitely wrong, because share price is part of the total returns. Dividends is also part of the total returns. If one of them actually drop, then you are actually losing money, right? But I think I find it very interesting that there are many people who come up with all these ways, these like coping mechanisms, right? What Eric think about this?
I think actually dividend, right, is just the management returning some cash that they earn during the quarter, return to the shareholders. Like nothing really very wrong with that. Like if they feel that, oh, okay, this one can return to shareholders. In the case of REITs, they when they return 90% or more, they save a bit on the taxes front, corporate tax. So as a REIT, they get some benefit lah if they distribute most of their cash earnings. So that's one thing. So the other thing is what happens if you're not a REIT, right? Like your bank, you distribute like 50% or slightly more or slightly less to the shareholders. So what's up with that, right? I think they just feel that it's better to give to the shareholders, and this keeps them happy, like in a sense. Yeah, so some people are actually happy receiving a cash dividend every quarter. It kind of makes them feel that it's like a passive income kind of thing, no? Yeah, so I think nothing very wrong with that. I don't know, like, is it supposed to be wrong?
Yeah, Eric, I think that's your overall view on dividends, right? But
Yeah.
just curious on your thoughts about the comment that Kelvin just read.
Wow, man. Means that you buy shares, even dividend shares in the with the strategy of living off the
Yeah,
dividend.
correct.
Well, that one quite dangerous though, I feel. Like if you need the dividends to live,
Mm.
I think like in the previous video we were commenting like, oh, if you have like 400k or 600k and then you just retire and then you just live off the dividends, right? Like you're kind of assuming that the dividends will forever be there. Okay, so because I'm quite a long time REIT investor, I won't say I'm very good in it. That one I have to ask the AK. I invested in REITs for quite some time, quite a long time. But one of the things I realized is that if the company is cui, right, their share price will drop and not recover. And dividend, right, will keep cutting until it also die off. There's quite a number of REITs that do that lah. Like the share price tank like crazy, and then for a moment, right, their yield can be like 10-20% those kind. But if you go and buy in, right, the next quarter, right, they will start cutting the dividend. Then cut, slowly cut until like almost nothing. So it becomes a pittance, the dividends.
So are you saying that even with dividends, so you are not safe either? So that's your
It's
point,
not
right?
safe.
But
It,
let's say go back to the question again, right? Two company, each of them earn 10%. Assuming you have enough capital that 10%, right, generate you, let's say, 10,000 per month. And you only need 5,000 per month just to get the cash flow. So you have some buffer there. So don't worry too much about the buffer. Just looking at these two company, both earning the same returns. One is that they pay 10% of dividend, the other one pays 0% dividend. Then the one that pays 0% dividend is that you need to keep selling your shares. So you are subjecting to the share price, right? So that's where the so-called dividend is important view come in. Because if it is fluctuating, it's fluctuating. I'm just continuing to receive that 10%, right? So that's the mindset of quite a number of dividend investors. So do you think that in this case, right? I know that let's say if the company go bankrupt, right? In two cases, I mean these two companies, you also end up with zero. That's a fact, right? But assuming that they are not going bankrupt, and do you think that these two investor or these two companies, is it like dividend become relevant now just because of the fact that the shareholder needs to draw the liquidity every month, for example?
I think we are trying to juggle too many balls here because you are looking at the business, the stock itself. You're also looking at your personal situation and trying to put a context to it. Like, oh, what if I suddenly need to sell? What if I suddenly need this liquidity? Then I think it becomes like very contextual, right, to people. Like some people say, I can hold it for 10 years, no problem. But we all
Yeah,
know
yeah.
that as investors, we say one thing, but when the crash really comes, suddenly you cannot hold already. It's suddenly, I think, gone case lah. China 完蛋了, got to sell or something like that. Sometimes when the stock tanks very badly, you will feel some sort of emotion. You still your holdings go down 50%. Yeah, you will actually. So I think very difficult to answer that question like point blank. It's not that I don't want to answer, no. Like, but if I really put a definitive answer, right, it is my own viewpoint.
Yeah, your
Because
own view lah.
I don't need
I
the thing.
I
Then
think
I would never need to sell it.
because that's the things, right? It's like, oh, we can talk about theory. In theory is irrelevant. I mean, dividend or not is not important. That's the theory. But the argument from the other side is that the moment you bring in all this context, right? Oh, the context is that I need some liquidity. Hence, okay, this become relevant, right? So
Yeah.
is that still whole, or do you still say that theory is still the correct one? So there's some form of a fallacy thinking that affect this kind of argument.
I think in the first place, right, you say that when companies pay out, they pay out from their balance sheet, right? That in itself is a little bit like it's not a science. Like, okay, so they pay out a certain amount, right? But sometimes investor when they see that hey, this company going to pay a lump sum dividend like 50 cents, like for DBS 54 cents, then they will just before like 2-3 weeks before the payout date, they might beat it up about 50 over cents. Then after that, just 2 weeks, XD immediately dropped 50 cents. So some people like you lah, I think you pointed out in your video, right? Say, see, pump up, then it dropped down again. So it's the same what. But if they don't pay out dividend, they don't have that bump up. So you just be like a flat line. But now you have the dividend, you have this additional element of we don't know when is the pump up going to start, and we don't know whether it's going to come. No, sometimes it's just XD, it will drop 50 cents, but there's no pump up. So there's a variable factor there.
Are you saying that that's free money? Because it's like not moving, announce dividend, then people bid it out, and then after they pay dividend, it come back to the same price. So essentially, it's like create new money already.
Yeah, something
Oh,
like that. That's
nothing.
why I say it's not a science, ma. It's not a science. Did DBS magically create 50 cents? Not really, lah. It's a perception, ma. So if you say that, oh, this share price, right, is based on their balance sheet. Also not really, right? Because DBS is trading on a premium to book value. So how much premium investor allocate to it is also based on the image that they have in the investor's mind. Like for Singaporean investor, maybe I don't know whether you all remember last time, right? Quite a while ago, UOB was the top bank. Only in the
Don't
recent, I
remember.
think, 10 years or so, right? Then DBS overtook UOB to become like in terms of share price lah. If not previously, UOB is always been the how to say the share price is the highest one. Yeah, so it's a perception thing, right? Then they feel that DBS, wow, the dividend quite regular, and then the profits margin going up, ROE going up. So then the investor switch off. Then there was this year that DBS overtook UOB. So I think it's a perception thing.
Yep. Yeah, definitely. I think dividends definitely will shape the perceptions. Okay, let's move on to the next comment. Okay, so this one I want to get Kelvin reactions. So let me read it up. This is misleading. The existence of dividend stocks means it always has a place in an investor's mind. If it is irrelevant, then by market force, it will disappear. But it does not, proving Kelvin's claim that the dividends are irrelevant wrong. The question is why Singapore is dominated by dividend stocks. The answers is probably tied to the fact such as the population size and financial focus. But Kelvin managed to bait me to watch this video means he is at least successful this round. So Kelvin.
Bait. No. I think it's okay. So my point about this video is okay, the conclusion of this video is don't just look at dividends, but you should choose a company based on good fundamentals lah. So like just now Eric, he say why DBS did better than UOB. I don't think it's about the dividends. It's about how DBS grew a lot faster than UOB. How they had better gross margin, better growth rate, better expansion plans, and so on, right? It's not about, oh, because I pay more dividends, full stop. That's not it, right? So that's why I say like dividend is irrelevant. You shouldn't just look at the yield to choose whether a company is good or not. Like for example, if I choose Capital DC, if I avoid Capital DC because it has a lower maybe not Capital DC, maybe I choose Parkway Life REIT because it has a lower dividend yield as compared to maybe Tree. But on the back end, maybe this one I don't know, like I haven't checked the charts. Maybe this Parkway Life is growing a lot faster than whatever Maple Tree. Then wouldn't the total returns be better? Wouldn't it be a better company as compared to Maple Tree? So that's my argument. Don't just look at dividends in the first place. So back to Boon Tee's comment, why dividends are irrelevant. I don't think dividends are irrelevant. It contributes to the total return, but you shouldn't just look at dividends at the and I think they say why Singapore is dominated by dividend stock. To say is just so happen that Singapore, the top companies are just so happens dividend paying companies, which are banks, REITs, mostly that, telecommunications. These are all big major companies, so that's why they pay dividend. So it's not about like population size, it's not about what financial focus. Maybe it is, but it just so happens Singapore is this financial hub. Then all these big banks are here. So
Are you sure that dividend share price move up more than UOB because of other things and not dividends? Let's say if we check the historical dividends, maybe dividends for DBS also going up more than UOB, then the share price also going up. So the person who said that I use dividend, I look at dividends also come to the same conclusions.
The dividends going up it must have a reason behind why is it going up. Is it going up because the company want to lure investor in, maybe by borrowing more money to pay out? I think Apple TV a while back, was it Apple TV? Not Apple TV. Some TV thing I also forgot what's the name. But for DBS, we know that it's because their earnings have grown these past few years, so that's why they are able to raise the dividends in the first place. Yeah, lor. And for Eric's comment about the company going up in share price then going back down, right? If you are planning to trade around this, by definition, you are a trader, not a long-term dividend investor. So this is the part you have to be clear about. Like, are you trading around it? If you are, then you are of course in the trading. If you are a trader, not a long-term investor, who will benefit from the long-term growth of the dividend stock. Yeah, which back to my point, dividend is irrelevant. Okay, I do admit that dividend has a psychological aspect to it. This is what makes it relevant. So, for example, if a share price drop, you can count on dividend to give you continuous income, but only if you need the income. If you don't need the income and the income pays out to you, then you reinvest back the income. The dividend suddenly doesn't become a dividend anymore. It just go back in. So I would say dividend is not relevant to people who don't need it. But for people who rely on income, then obviously it is a good thing because it keeps you sane in the event of market crash.
I think any discussion about dividend, we probably need to bring up the dividend golden boys in the, I think 10 plus years ago, right? You have the telco companies. I don't know whether you guys still remember. There was a time when I was still a stockbroker. The StarHub, Singtel, M1, those were the most solid dividend companies in Singapore. I think when the other time, like other than REITs these were the only guys. Banks not so much because last time banks were paying like 1-2%, so they're not seen as dividend players. So the the telcos, right? A lot of investors see them as safe, but they are leveraged to the like they are because their business is recurring income. So they leverage don't know how many percent. I think that one I I cannot remember, but I do know that they are very highly leveraged and they pay out, right, the dividend. Some of it is like pretty close to what they earn. Like they earn so much, they pay out so much, or in some cases they pay out slightly more than what they earn, which is a terrible red flag, right? Like, yeah, but they still keep paying out the dividend quarter after quarter, and some of them even increase the dividend. So they literally take loan to pay the dividend. So that was in the good old days where the interest rate close to zero lah. So they take a lot of loans and then they can leverage themselves to the hilt, but they are still fine because debt is cheap. So they just borrow and they pay investors, and then they beat it up the share price like quite high. I think for StarHub, it went up to like $5, 4 plus $5. It was crazy. It was nutty. Yeah, but that time everyone say that telco cannot fail because everyone needs a phone, right? And you only have 3 options. We didn't have all those GOMO and all those things yet at that time. So it's like you kind of suck thumb, right? You have to subscribe to one of them. Yeah, but we all know what happened after that. So it's the interest start going up. But even before that, the GOMOs and all that, the mobile, what do you call those? Mobile phone operators. They don't actually own the infrastructure, but they rent it from Singtel and StarHub. Yeah. So when these players come in, what subscription is like what, $10, $12, and they give you so much data. So that was the beginning of the downfall for the telcos.
Become like commodity product already. Actually, on this StarHub, I also own some StarHub, but
Really?
that was I think not too long ago. Actually, I think it's less than 10 years ago. It's within 10 years one. Probably it's like 7 years to 10 years ago. So not like 20 years kind of period.
When
But
did you sell?
quite some time already. I think probably 2015 or 2013. I don't remember those period now. Same lah. It's like just bought thinking that can get the dividends, and then the share price just keep going down like a straight line. So we are all hurt by dividend investing before. That's why now become dividend investing hater already.
No leh, I don't actually hate the dividend.
No, me, not you.
You hate dividend meh?
No lah. We all keep on whacking dividend.
Only Kelvin whack what?
Just to put it on record, I don't hate dividend, even though I made a video about it. My point is just to say, don't look at dividends stocks from the point of dividends.
Yep.
So like Eric, for Eric's the example. So for like Singtel, even for Singtel, okay, recently it went up quite a bit. But it's pretty flat, right? For the past 15 years, 16 years, is basically stuck in a lost decade. Yeah, there may be other better opportunities elsewhere which can grow a lot better. Yeah.
Okay, time for next comment. Dividend do matter, but it depends on how those dividends are paid and whether you are investing in a growing company or whether it is just a corporate Ponzi scheme. If a company only pays 40% of its earnings as dividends and those dividends are already giving you 6% yield and the company value and share price still go up 5 to 10% because of the retained earnings and growth of the company, then of course it's a good investment. But if the dividends are just paid by the company returning your own money in a roundabout way and the share price keep coming down, then you are not investing but just wasting time. I think what he's trying to say is that you can invest for dividends, but at the same time, you don't treat every dollars of dividends the same because you also need to look it up like dividends where it is from. Because like what Eric just shared, right? Let's say if the dividend payout ratio is more than 100%, it's all show up on the financials, right? You can check it out. And let's say if just returning 50% of the earnings and you still get 6%, so you get a lot of buffer there. So you can continue to earn that dividends at the same time you can still expect the company share price to continue to grow because there's some retained earnings, right? So the is that not the better way to invest because you get both side, right? You get the good returns, you get the good dividend, and then at the same time it's not like you are buying a company that keep on issuing debt and pay dividends, right? I'm saying that you can do all this research yourself and so doing the dividend investing the right way. And so it becomes still a relevant because you still get the cash flow, right? I think that's basically many are arguing.
Of course you'll
Yeah.
get the cash flow.
But it is relevant, right? Because if you have all this, then it's like there's some legit to the earnings. Because we all know that earnings is also something that is quite easy to manipulate. But let's say a company, you manipulate the earnings, you do all sorts of financial engineering, you show the earnings. But when it comes to actually pay out the money, right? You you cannot just keep on, like do a magic. You can do magic on earnings, but you cannot do magic on the cash flow to distribute to your shareholders. So so I think that's also one way that you say that okay, only the dividends is the real money, right? The money on the shareholders' hands, right? That able to distribute. Whereas another company, let's say it claims that it earns so much, so and so, but because they don't need to pay out, right? So they can continue to manipulate this for many, many years until suddenly one day it blows out, right? So that's where the dividend investing is good, right? It puts some legitimacy to all the cash flow, all the earnings, all the financial statements.
What's Eric thought on this?
I think I don't know, like I think the bank's scenario is like one of the best scenario I've seen in a fairly long time. Like if the rates go up, they earn on the interest, right? Interest. If the interest rate comes down, their loans will increase. Then they also make more. So it's like heads they win, tail they also win, kind of situation. So I don't know. I think the only scenario that I see the banks doing not so well is probably recession, financial crisis of sorts. Then the whole economy tank. Then no matter where's the rates, they're not going to make money because people are not doing business. They are not lending money. Then you will be bad for the banks if the economy goes down.
Then it just so happened that bank also pay out dividend. Is that means that dividend is good?
I don't know, that's why I say it's like a golden scenario I see for the banks. They pay out like for I think DBS is like 50%. For OCBC, I think it's slightly above 50. UOB is slightly below. So I think for the banks, they returning cash to the shareholders, but they are also retaining a good chunk every quarter just to build up their business. So they are reinvesting in their business and they are also paying good dividends. So in this sense, right, I really think that the banks are in like their golden era. Like I won't be surprised if like DBS hits $40 soon, because really you don't see anything but it's always you don't see anything, then they'll whack you with something that's not out of the park. Yeah, too many times already. Like every time I see something, wow, 包价, then after that something will whack, and then the whole balloon will burst. But I don't know when is that gonna happen and what is the thing that's gonna happen. But I do know one thing: banks are very cyclical. Yeah. So one fine day they will crash. Don't know when is that, but it probably will. And then
But
we'll see what.
but bank is not the only one that pay out, let's say 50% payout ratio, right? So
Yeah.
other companies
Yeah.
that that pay discount, I think the numbers not so important. Like it could be 40%, could be 60%, doesn't matter. But it's more like when we say, oh, when company pay dividend, they pay from your balance sheet, and then so you have zero retained earnings, so you can't grow and so on. It's almost like we are saying dividends, all dividend paying companies, they are paying out all their earnings, but the fact is not much. Some of them actually pay out just a portion. They're still able to grow. So it's not that different compared to another company
Can I give a
that
can I
don't pay
give
out
a
dividends.
different point of view or not?
Ah,
Like if you're a business owner, right? If you are running a business, let's say you earn 10 million, would you use like 20% or 30% of that 10 million, 2 to 3 million, to do some marketing, to pay influencers to like rate your products or your services, and then like make the image of your company better in general? There's no tangible benefit from that. It's not like you buy into bonds or what, you get a return. Don't have. It's just to polish up, like market your corporate brand. So do you
advertisement costs.
yeah, yeah. So for companies, dividend could be like a form of advertising cost to investors to make it more attractive. Yeah. So it doesn't really say that, oh, we pay out from our earning means that it's no good, it's irrelevant. It does serve a purpose because it makes the stock of the company slightly more attractive to people who might value regular payout. For example, retirees, right? Not necessary for young people. So I see that, like, can you see it from a business point of view that dividend might be a good strategy, especially for mature companies, because they have no need to aggressively grow their infrastructure, no need to aggressively grow their payroll, so they can afford to partition like some percentage towards so-called marketing and making their shareholders happy. Like, we make money, we share some of it with you. That's the kind of idea behind invest dividend.
I think it's like it's a form of mind share lah. So they keep you remember that they still exist,
Yep.
still standing strong. And
Mm.
then I think the fact that they are being listed, like stay on the stock market, people trade it, then there's discussion, more coverage from the news media. Also, right, for those that for the companies that is publicly traded. So I think all this add to the mind share lah, and that help with the advertisement. I agree with you lah. Yeah.
I want to give a different perspective. Again, I don't hate dividend, but I feel like dividend is a bit cost inefficient. Okay, so for Singapore, we don't have tax problem with dividend because everything is 100% yours. But for overseas, dividend are taxed, right? So in that case, it would be better to do share buybacks instead of dividend. And also you can do quarterly share buybacks, right? Because and it will cost less, basically no tax on your end also. Then it will have the same effect as paying out dividend, but a lot more capital efficient, tax efficient. Then for dividends, because now Eric say that it's good for people, but it's only good for people who need the money. So for people who don't need the dividend, they will reinvest the money, or worse, they will just spend away the money because they treat it as free money, mah. So there's one comment that say I have like what 30% cost on yield on capital lah. So they invested, then they get 30% yield. I'm enjoying that now. But the thing is, if you are spending away all that money, then that money is not growing. What? So in the end, you are still sort of selling 30% of your initial share price, sort of lah. But because the stock is growing, then you have unlimited growth lah.
Yeah, just come back to the yield of course. Actually, that's the comment I wanted to bring out also. I think this is you can only generate yield on cost of 30% if the dividends really, like shoot up a lot. Say for example, you start out right when you bought the company is only at 5%, right? But that was, let's say, 10 years ago. After that, dividends every year keep on increasing. But the capital that you put in, let's assume that you just put in at one single time point, right? Which is like, let's say, long time ago, 10 years ago. Then now the dividends, because it has grown so much, right? You take the dividends that company pay out today, divided by the cost that you invested, let's say 10 years ago, you get something like a good ratio, right? You get like 30%. So that's where people say, oh, I have, like very high yield because I bought it cheap. many years ago. Okay. And then the comments on this, the response on this comment is also interesting. You on course tell people about your poor financial literacy without saying it. So I don't know whether you all agree with this or not. Lah. Just, do you all really looking at this you on course? Do you try to look it this way so that you feel good about it? I think Eric invests for dividends, right? Eric, when you look at the companies that you invest in, those that pay dividends, right? Do you look at today's yield or do you look at yield on cost?
I think normally I look at today's yield, not so much the yield
But
on
today
cost.
yield is not important, ma. Say for example, you buy DBS, right?
Mm,
Okay, they say 6% you buy,
mm,
then share price tank 50% tomorrow. Suddenly your today's yield become 12% already. That's
mm.
how the calculation works, right? You just take the today dividend amount divided by today, let's say like market cap or share price. So if share price drop, your yield will go up, but you didn't get to enjoy the additional yield, right? You already bought the shares.
As in, when I say the barring like those kind of big movement, like you're saying, drop 50%, because you to enjoy like whatever current you need to hold 1 quarter. So if it drops, then the next quarter, lor, you see whether you
Yeah,
get
yeah.
that. Yeah, lor.
But not necessarily one day, like can be 1 year, 3 years from now. Lah. It's just that I'm saying if you look at yield, the today's yield, right? Or the market yield, right? It is fluctuating according to the share price. Share price drop, the yield will looks high. Share
Mm,
price goes up, yield will looks low. But
mm.
if you look at yield on cost, your cost is the fixed number.
Oh,
So then yield on cost can also go up or down, but you only need to track the dividend payment over time, right?
okay.
So you
So
can get these kind of situations where the guy is so happy to receive a 30% yield on cost. How to get it? You just invest and then wait the dividends grow over time. Lah.
okay. So
Do you
the
buy into this idea?
do I buy into this idea? I think it's a good way to make yourself feel very happy. I mean, a lot of, I think if you watch AK, right, like you watch his video, you know that quite a lot of his shares free already, free like free holdings,
Wow,
because
this one even better.
the dividends actually literally pay his whole cost already. So it's like a free holding. So for my DBS, I think you guys will know, right? When I bought it somewhat during the SARS, COVID thing, right? And then it was quite low. So when it doubled, I sold away two-thirds of my position, which was quite dumb. Lah. I sold away two-thirds when it hit $30. Then I'm like, yeah, man. Then my one-third is free
Free money.
holding. Free, yeah, free lah. Basically, the profits are literally that one-third amount. Yeah lah, but if I want, I can always think that, oh, it's infinity yield, right? Because it's free. It's just the profits on that trade. But there's no point in thinking about that thing, right? Like you feel very happy lah. Like, okay, then so I don't know. Like what kind of benefit does it bring?
So you agree that the financial literacy not so good you
No, no, no.
make
I'm
this kind
no,
of
no, no.
feel good.
I think is a way that you want to reason it. It's fine. You want to reason that way. You want to reason like current yield also is fine. I mean, I'm not judging the person on his financial literacy. There's nothing wrong with thinking that way, right? Is there?
Wow, Eric, have mercy. Like.
So it's back to the same point lah. So it's dividend is more about feel good factor rather than actual financial benefit. So it's
Good is also a financial benefit, don't you
yeah,
agree?
it's a good financial benefit
Yeah.
because it makes you hold on to the stocks versus if you just hold the stocks and sell it off, you may panic sell at certain times if you see the stock go down.
Yeah. It promotes stability in the stock price somewhat. Unless the business really underlying really tank big time, then people will massively sell it. Because if not, you see if people trying to time DBS, right? It's been paying out 50 over cents every quarter. So you time it like no need for long, maybe 2 3 years. You already miss out on like four, what is it, $4? $4 of dividend, like just by like waiting and seeing that you come down, crash, wait for it to crash 15%, 20%. Doesn't really happen very often. So it's the opportunity cost also. They make you think twice about selling it, and that in turns contribute to the stock stability. Lor. So it's I would feel that DBS was fairly deliberate about their dividend policy when they implemented it. I'm not sure when they started it. I think like maybe 6-7 years ago. Like it becoming very regular. Even though the other two banks went to semi-annual, they still stuck to the quarterly. I think that actually, I know that I read AK's post before. I think that he likes the quarterly dividend. I don't know whether I'm wrong or not. Maybe he'll comment. And I remember somebody actually said that they preferred that quarterly payout over the semi-annual. Yeah, I mean, if you ask me, I also prefer quarterly. Right? You ask you semi-annual or quarterly, quarterly better. Yeah, so it promotes
You
stability. Lor.
feel good 4 times a year versus 2 times a year. Of course, 4 times
Absolutely.
lah.
Yeah,
I
absolutely.
can also argue that like S&P going up 5% this week makes me feel good, and I don't want to sell.
But next week you feel bad again.
Up
Yeah,
down, up
that's the
down, yeah.
point. That's the point. So dividend, the feel good factor is you own self make own self feel good, because like if you feel good about dividend, then the past 3 years REITs has gone down. Did you feel a little less good?
No sell, no loss.
Yeah,
Yeah.
no sell, no loss, right? So there's no difference with dividend paying and non-dividend paying. It's about you yourself whether you can control your own emotions or not. That's
Okay.
why I say
Maybe chicken
we
is
need
not
to
here. We need chicken to poke holes in Kelvin's argument.
I think today's conclusion is that dividends is relevant. So we have to wait for chickens to come back
yeah,
and whack us.
it's relevant. It's always relevant to a certain degree.
Okay. So is it just a bad title?
It's not. Okay, I think that's. If you guys got any questions, comments, do feel free to leave down below. But also try to spare us a bit. Okay, that's all. Bye.